Hello friends, today we will review Pepsi. Pepsi is one of the largest food and beverage manufacturers in the world. It's probably the only company that can compete with a giant like Coca-Cola. So, let's move on to the company's financial indicators. You can see the company's stable revenues, which are approximately at $66 billion, with revenues starting to grow only in 2020. The net income situation is almost the same. The company's assets are constantly increasing, and so are its debts, though there is a slight difference between them. The company is also actively buying back its shares from the stock market. Before I evaluate the company, make sure to subscribe to my channel so you don't miss my future videos. My final rating for this business is 9 out of 10. The company sells its brands almost worldwide, with 23 brands generating over $1 billion in stable revenues annually. The company also has joint ventures with Starbucks for producing and distributing coffee on retail shelves such as Walmart. I really like this business, it's one of the best businesses I have reviewed. But why did I not rate it 10 out of 10? The reason is that even though they have 23 amazing brands, all are in different categories. This means there are additional costs for developing and distributing each one, which slows down the company's growth, as seen before 2020. The growth we see today is a result of inflation rather than the company's success. In the end, Pepsi is somewhere in the middle between food and beverage, meaning it competes on two fronts, one with Coca-Cola in the beverage sector and the other with food giants like Nestle and Kraft Heinz. Agree, it's very difficult to maintain leading positions in such a situation, which creates additional risks for the company, and this is why I deducted 1 point. But despite all this, the company is still excellent, though slightly worse than Coca-Cola. Today, the company's stock is around $174, which I believe is a bit overpriced. While the company has stable profits that will benefit its shareholders, $238 billion for the company seems a bit high to me. I'm not saying the company will become cheaper in the coming years, but if you buy it today, you can expect approximately a 5% annual return. As demonstrated in 2020, the company handles inflation remarkably well, so you might add a couple of percentage points to this return. It's definitely one of those companies you'd want to own, but don't expect anything too extraordinary from this business. If the company maintains its profits at the current levels, it will already be a success. Subscribe to my channel so you don't miss my upcoming videos.